Welcome to the Secure Circle Show, where we empower you with the knowledge to protect yourself against fraud, identity theft, and cyber threats. In this podcast, we delve into the critical issues surrounding cybersecurity in our increasingly digital world. Each episode features insightful discussions, expert interviews, and actionable tips that will help you and your loved ones stay safe online. From understanding the latest scams to learning how to secure your personal information, our goal is to create a community that prioritizes cybersecurity. Whether you're a seasoned tech enthusiast or just starting your journey to online safety, the Secure Circle Show is here to guide you. Let's jump in.
Welcome to the Secure Circle Show. Today we're diving deep into something really vital for your financial security: understanding investment fraud.
That's right. We're not trying to make you an expert trader overnight.
No, definitely not. It's more about equipping you, with the know-how to spot those red flags.
Exactly. Protecting your hard-earned money. We've looked at insights from Investopedia, Trend Micro, the OCC.
The IC3's Elder Fraud Report from 2023, the Tennessee Attorney General's office, too. Quite a range.
Yeah, but good mix. And our mission here is pretty straightforward. Help you understand how these schemes work, the tactics involved.
And crucially, how you can safeguard yourself.
That's the main goal.
Okay, so let's jump right in. What is investment fraud, basically? It sounds quite broad.
It really is. At its core, it's about deceit. It's any dishonest practice to trick you into putting money into fake investments.
Or even real investments, but based on false info.
Precisely. Often with promises of returns that just sound, well, way too good to be true.
And this isn't limited to one type of asset, is it?
Not at all. It can involve stocks, bonds, real estate, even things like cryptocurrency now.
It's interesting, or maybe worrying, how these scams have changed over time.
Oh, definitely. They've evolved. We've gone from, fake paper stock certificates
For the old school stuff.
to really sophisticated online schemes. The internet and digital communication have, unfortunately, made it much easier for fraudsters.
Easier to reach more people, I guess.
Exactly. Cast a wider net, faster, easier.
So let's get into some specifics then. What are the common types of scams we should be looking out for?
Well, let's start with the classic, boiler rooms.
Okay. What does that involve?
These are high-pressure sales setups. Often starts with a cold call you weren't expecting.
All right.
And they push speculative or just plain fraudulent securities, very aggressive tactics,
Like what?
making claims you can't verify, demanding you pay immediately, sometimes even making threats.
Wow. That sounds intense.
It is. And it violates fair practice rules, securities regulations, and they're not always in literal boiler rooms anymore.
They could be anywhere, using email or messaging.
Absolutely. The key is that intense pressure, that urgency. Legitimate investments don't work like that.
Okay, what about those schemes where, early investors get paid with money from new people?
Ah, yes. Ponzi schemes, that's exactly it. The returns aren't from real profits.
It's just new money coming in.
Correct. It needs a constant flow of new investors to keep going, and they always collapse eventually when that flow dries up.
The Bernie Madoff case is the huge example, right?
The biggest one, yeah. Cost investors something like $65 billion. Just staggering.
So the red flags there: high returns, low risk.
That's a big one. Promises of high returns with little or no risk. Overly consistent returns too, markets fluctuate, right?
Sure.
Also, unregistered investments, unlicensed sellers, and very secretive or complex strategies they don't want to explain.
Got it. And then there are pyramid schemes, similar but different.
Similar structure, but the focus is different. In pyramid schemes, participants earn returns mainly by recruiting new investors.
So it's all about recruitment.
Pretty much. They're unsustainable because you need exponential growth, more and more people, recruiting more people. It can't last.
And they sometimes look like legitimate businesses, multi-level marketing.
They often try to disguise themselves that way. But the key difference is often the lack of a real underlying product or service being sold to actual customers.
The main activity is signing people up.
Yes, often with upfront fees, promises of quick cash, passive income, but very little documentation or proof of real business activity.
Okay. Another one I've heard of is pump and dump. What's that about?
Right, pump and dump. This is where fraudsters artificially inflate or pump up a stock's price.
How do they do that?
Usually by spreading false or misleading positive news or hype about it. Often targets penny stocks, those trading under $5.
Okay, so they create buzz.
Exactly. Get the price up. Then they dump their own shares, selling them at that inflated profit,
And then the price crashes.
leaving everyone else holding basically worthless stock. It's pure manipulation.
Nasty stuff. Are there others we should know?
Definitely. There's advance fee fraud. This is simpler in a way.
Oh, so.
They just ask you to pay fees up front for some great investment opportunity, and then they disappear with your money. The opportunity never existed.
Oh, right. Pay first, get nothing.
Exactly. And then a huge one now is cryptocurrency scams.
Was crypto being so popular?
Precisely. They exploit that popularity. You see fake initial coin offerings or ICOs, fraudulent trading platforms.
Using complicated jargon to confuse people.
Often, yes. Make it sound sophisticated. The IC3 report we mentioned actually found these were the costliest for people over 60 in 2023.
Really? How much?
Losses over $1.1 billion just in that group from crypto scams. It shows how quickly scammers jump on new trends.
That's incredible. Okay, what else?
Promissory notes can be tricky. These are basically short-term IOUs from a company.
Promising good returns.
Usually high returns with supposedly little risk, often offered by companies you've never heard of.
What's the catch?
Be especially wary of notes with durations of 9 months or less. Sometimes, that short duration means they avoid certain federal or state registration requirements.
Making it easier for scammers to operate.
Potentially, yes. State regulators have seen a lot of fraud involving these. Also, watch out for real estate investment scams.
Like flipping houses.
Sometimes promoted through seminars promising quick riches from things like hard money lending or property flipping.
Sounds too easy.
If it sounds too simple, be very skeptical. Always research the people and companies involved thoroughly.
It feels like these scams are everywhere, especially online.
They really are. Social media and internet investment fraud is a major problem.
How does that work?
Con artists get into online groups, social networks. They build trust over time, seem friendly.
Then they make their move.
Yes, make a targeted pitch. Again, often promising huge returns, no risk. You also see other red flags online.
Like?
Offshore operations, insisting you use specific, maybe obscure e-currency sites.
Oh, weird payment methods again.
Right. Offering bonuses if you recruit your friends. Websites that look unprofessional or have very little real information. And a lack of proper written documents.
And sometimes they target specific groups, right? Using shared identity.
Yes, that's affinity fraud. They prey on trust within groups based on age, ethnicity, religion, profession.
Using that shared background to seem trustworthy.
Exactly. It's particularly insidious. Then you have things like high-yield investment programs, or HYIPs.
High yield sounds good.
But they promise guaranteed high returns, often based on investments that don't exist or are worthless. Pure fiction.
And there are even scams targeting people who've already been scammed.
Unbelievably, yes. Recovery room schemes. They contact victims, claim they can recover the lost funds.
Let me guess, for an upfront fee.
You got it. They take the fee and disappear. It's preying on desperation.
That's awful. And we should probably be careful even with legitimate-seeming advisors.
Absolutely. We need to mention unsuitable financial products.
What does that mean?
It's when an advisor pushes a product that maybe isn't in your best interest, but benefits them more, perhaps through high commissions.
Like complex annuities with big fees.
That's a common example. Or even billing for services you didn't ask for or receive. It highlights the need to be watchful, even with professionals.
So knowing all these types is one thing, but how do the scammers actually find people to target?
They use a few methods. Publicly available information is a big one, things you share on social media, for instance.
Things we put out there ourselves.
Right. Also, data from data breaches, unfortunately common. They track online behavior using cookies, see who's looking at investment sites.
And phishing lists.
Yeah, buying or obtaining lists of emails and phone numbers to just blast out their pitches to as many people as possible.
It really underscores needing to be careful with our data. Okay, so given all this, what are the absolute must-watch red flags? The big warnings.
Number 1, unsolicited offers. If someone contacts you out of the blue, cold call, email, social media message about an investment, be immediately suspicious.
Especially if you don't know them.
Especially then. Number 2,
Yeah.
promises of high returns with little or no risk. That's the oldest trick in the book.
Because risk and reward are linked.
Always. If someone guarantees huge returns like 2% a day, 14% a week, something crazy runaway, it's almost certainly fake.
That classic too good to be true feeling.
Trust that feeling. Also, high pressure. Any push to act fast, that it's a limited time, once-in-a-lifetime deal.
Legitimate places give you time to think.
Always. They want informed clients. Another red flag, strategies that are super complex or secret.
If you can't understand it.
Don't invest in it. If they can't explain it simply, be very wary. And watch the payment methods.
Wire transfers, crypto. unusual stuff.
Exactly. Requests for those methods, especially to individuals or unrelated companies, are suspicious. Lack of proper documents, too.
Like a prospectus.
Yes, or disclosure statements. If they can't provide official paperwork, that's a problem. Be wary of anyone claiming to have inside information.
That's illegal anyway, right?
Absolutely. And just generally aggressive or pushy sales tactics. If they won't take no for an answer or make you feel bad for hesitating,
What about the advisor themselves?
check their credentials. If they can't provide verifiable financial data, or if they lack proper registration and licenses, big red flag.
Check with regulators.
Definitely. Also, problems getting your paperwork or receiving promised payments. Delays, excuses, be suspicious.
And who you make the payment out to.
Good point. Checks should generally be payable to the company, not an individual. And payments shouldn't go to some random P.O. box or different address.
And pressure to just roll over investments automatically.
Yes, be careful about that too. You should always understand the terms and actively consent to reinvesting.
That's a solid list of warnings. So how do we actively protect ourselves? What are the steps?
Research, research, research.
Yeah.
Before you invest a dime, verify the person and the firm.
Where can you do that?
Use the SEC's resources, like investor.gov. Also, FINRA's Broker Check website is excellent for checking brokers and firms. Check with your state securities regulator, too.
So do your homework first.
Absolutely. And be skeptical. Trust your gut. If it sounds too good to be true, it probably is. Treat unsolicited offers with extreme caution.
Maybe get a second opinion.
Definitely. Talk to a trusted, independent financial advisor who isn't trying to sell you that specific product. Get objective advice.
And understand what you're investing in.
Critically important. Don't invest if you don't understand it. Ask for written information. Read it. Research the investment and the company behind it.
Be careful about fancy titles too, like senior specialist.
Yes. Be wary of vague senior certifications or claims of being a retirement consultant unless you can verify their actual qualifications and licenses.
And if you do see something suspicious,
report it, even if you haven't invested. Contact the SEC, your state regulator. Reporting helps protect others.
Okay, proactive steps are clear. But what if the worst happens? Someone realizes they have been scammed. What's the immediate action?
Act fast. That's the absolute key. First, cut off all contact with the scammer immediately.
Don't talk to them anymore.
No, don't send more money, don't give more info no matter what they promise or threaten. Then, document everything.
Keep records.
Yes, dates, names, phone numbers, emails, websites, what they promised, copies of transactions, everything. Keep meticulous records.
Then report it.
As quickly as possible. Report to the SEC, the Federal Trade Commission, STC, your local police, and definitely report to the IC3.
That's the FBI's Internet Crime Complaint Center, ic3.gov.
Correct. It's the central hub for internet crime. And timely reporting there is crucial. Their 2023 report showed huge losses, especially for older adults, over $3.4 billion total, for those over 60.
And investment scams were a big part of that.
The costliest part for that group, over $1.2 billion lost.
Yeah.
But the IC3 has a recovery asset team, the RAT team. Yeah, recovery asset team. They work with financial institutions to try and freeze or recover stolen funds, but speed is absolutely essential for them to have any chance.
So reporting quickly might actually help get money back.
It can, in some cases. It also helps authorities track these criminals and warn others. Don't be embarrassed to report. These scammers are professionals.
That's a really important point. It can happen to anyone.
Absolutely. Reporting helps fight back.
So, wrapping up, it's clear investment fraud comes in many shapes and sizes. But understanding these tactics, these red flags we've discussed, that's really your best defense.
It truly is.
And
And just always remember that core principle. No legitimate investment guarantees high returns with zero risk. It just doesn't exist.
if it sounds too good to be true.
It almost certainly is. Trust that instinct.
We really hope you'll share this information, talk about it with your friends, your family, especially anyone you think might be more vulnerable.
Yeah, spreading awareness is key. Staying informed, staying vigilant, that helps everyone build a more secure financial circle.
Well said. Thank you for tuning in to this deep dive on the Secure Circle show. Please follow the show for more discussions on protecting yourself from fraud.
We'll be back with more insights to help you navigate today's complex world safely.